Nonetheless, anyone that holds their securities or their metal in what is, I guess, commonly known as street name is allowing their brokerage firm to loan that stuff out. Like if you own 100 shares of Apple, and you hold it in street name in your Merrill Lynch account, and another Merrill Lynch client wants to sell Apple short, they have to borrow those shares and to sell them because that short seller doesn't have it. So they're going to borrow those shares from you, even though you don't know it, and sell them to another buyer, thereby creating that short position. But you still have your Apple shares. It's along in your statement, and if they'd come up with it if you had to ask for a statement. But nonetheless, it's all commingled. If you don't like that, if you don't want that, if you're worried about your brokerage firm going belly up and you have to get in line waiting for your stock certificates, I'd encourage you to take your stock certificates now. I mean, go the old lady route. I mean, that's what, back when I was a stockbroker 20 years ago, that's what all the gambling old ladies did. Just go ahead and send me my certificates, Sonny. And so you would. And they put them in the safe deposit box. Probably not a bad idea these days. In terms of metal, same game gets played. If you have what is called unallocated gold, and that's gold that's stored in a vault owned by a bullion bank, that bank can lease it, can utilize it in their own short selling, anything. That's the whole fractional bullion banking system, is that there are multiple claims on the same ounce of gold. The gold that you have in your safe, the gold that you own in your own two hands, is allocated. Okay? How do you know you own 100 shares of Apple? Well, because you've got a certificate that says, owned by you, or joint tenancy with your spouse or whatever. You own it. That's it. To a different extent, how do you know you own gold? Well, the only way you know you own it is if you have it in your hands. You hold it. Period. So I would encourage, there are several kind of alternative vault companies that are out there where it is fully allocated gold, and you can go look and see it and touch it and all that stuff. That's where I'd have mine if I didn't have it buried in the backyard. I didn't say that. It's not really in my back. Don't come to my house and start digging in my backyard. It's not in my backyard.
Where do you live?
Yeah, exactly. I live right next door to Fox. It's in his backyard.
Okay, next question. Thank you for answering the first question. Second question. This question focuses on contra-party risks associated with purchasing mining stocks. Gold and silver miners have been touted as a top tier of stock ownership when valued at their proven resources and historical management capacity to produce above ground bullion. Many of these miners are predicting significant increases of bullion output at the same time that the actual valuations of the bullion they produce is expected by many to geometrically increase in value. To further sweeten the pot, these miners are currently significantly undervalued with respect to the current upswing in precious metals valuations. Issues like nationalization and luxury taxes are definite concerns of the investing community. Please discuss your take on the risk/reward fundamentals of miners and stocks, including sovereign confiscation and super taxes, in your analysis.
Boy, oh boy. That's another one of these long questions. I'll try to give that as short of an answer as I can. Yes, all of those the geopolitical risks, and which leads to this kind of nationalization risk, and then you got taxation you got to worry about, which kind of almost even dovetails into confiscation. Those are all things that we can all speculate upon, and you've got to be wary of, even on an individual basis. Who was it? Agnico Eagle Mines just had one of their main mines get flooded. A week ago? Stock went down 20%. You got to be wary of these kind of things. I would rather, the part that I would, prefer to spend time answering is the valuation part, because mining stocks drive people crazy. and rightfully so, because they don't seem to reflect the value. I mean, many of them are trading at the same share price that they were 7-8 years ago when gold was $400 or $500 an ounce, and so it doesn't make any sense. And there are a number of factors that cause the individual issues or the sector in general to not display its true value. I don't know. Maybe I'll just stop there. I mean, you want me to kind of rattle them all off or pick one, my favorite one?
Pick your favorite one, of course.
Okay. Let's get back to the brokerage firms that we talked about earlier and how they might give you a research report. Remember how equity, the analysis of equities works. You have some guy or gal that's a CFA, and they go out and they meet the company and they decide that there's earnings estimates. And yes, we think that company X is going to make $2 a share this year. And then the people look at that and say, well, within this industry, that should have a historic price earnings ratio of about 20. So therefore, our price target this year is 40. Right? That's about how that works. In a mining stock, there's an extra little wrinkle, and that is you can't project earnings without projecting the price of that commodity. Okay, so the analyst will go out and say, hey, we love this company, they're doing great, they're controlling their costs, their energy costs, their input costs, all this jazz. But the thing that equity analyst doesn't control is the year end, this year, next year price of where they think gold or silver is going to be, where that commodity analyst of the same firm thinks gold and silver are going to be. So the equity analyst might love Goldcorp and want to say they're going to earn a certain level of shares, and the equity analyst may have their own personal opinion where they think gold is going. But the equity analyst firm will only allow him or her to use in their calculations of earnings the number that the commodity analyst of the firm says gold's going to trade at. So now you get into the politics of the whole thing, because if the firm is, say, JP Morgan, and they have a vested interest in not seeing silver trade at $60 or $80 an ounce, well, I don't know what the JP Morgan analyst, actually the JP Morgan gold guy just came out with a $2,500 price target. But silver, I don't know what they're, but anyway, you can see where there's kind of a conflict of interest there. So the Merrill Lynch gold analyst may say, we think gold is going to be $1,300 in 2011 and $1,400 in 2012. And believe it or not, those numbers are out there. Well, the equity analyst that follows Goldcorp or come up with their earnings projections, they have to use that $1,300 or $1,400 number, regardless of where gold is today. They have to use those numbers. So therefore, then all of a sudden you get an earnings projection of only $1 a share and a share price of 20, and they go, oh, see, $20 is a good share price. So that is just one of the factors that causes gold miners to not currently reflect the true value of what their future earnings are going to be. And it's just one of the things that drives mining share investors crazy. It's like any other kind of speculative investment. Your best bet maybe is to buy a handful of them, take delivery of the certificates, stick them in your desk drawer, your safe, and then come back and look in a couple of years and see what they're worth, because on a day-to-day basis, they're going to drive you bats.
Okay. I have a question for you regarding your website. Do you have any plans to sell Turd Ferguson 1-ounce silver rounds with a big hat on one side and a pile of turd on the other?
I would love to. Wouldn't that be fun? If we can make money off of it. No. I have a friend that actually knows a guy that's a jeweler that thinks he can make some. It would be a hoot. I'm not sure if I'd make it a coin. We might have to make it something more naturally correct. That might be kind of fun. But yeah, that'd be fun, wouldn't it?
Yeah, I think people would love to add to their physical files.
I'll tell you a funny story, though. A guy, this was not long after I started the thing a year ago. Guy donates money, hits the feed the turd button, and sends me $10. And I sent him a thank you note because I always send everybody a thank you note. Everybody that ever gives me money, I'm so stunned and appreciative that somebody would actually do that. I just started at the beginning, always sending a thank you note. So I sent it, not a handwritten, an email. So I sent this guy an email. He sends me a thing back. He says, well, I thought it was the least I could do. He said, I've had this dog crap old coin on eBay forever. And I had it listed for $20. And the biggest bid I ever got for was like $1. And he said, nobody ever bought it. He said, I went in and renamed it a Turd Dollar. And somebody bought it for $20. And he said, so least I could do is send you half of it. So he sent me $10. So I don't know. Maybe there really is a market for some turdency. We'll see.
Dr. Steve, thanks very much for hitting Turd up with a couple of hard questions and finishing it up with a softball. We all love a lobbed ball question when it comes to us. And for our last lobbed softball question, we're going to hand you over to Romans.
Hi, Turd. This is Romans back at you. I'm going to ask you to put on your Great Karnak hat here and look into your crystal ball and see what you have to think about this. To me, it seems like all the leverage markets are on borrowed time. Turd, I wanted to ask you to put on your Great Karnak hat again and look into your crystal ball and see what you have to think about this. To me, it seems like the leverage investment markets are on borrowed time. Whether or not you agree, do you think it would be days or weeks or years? Do you think they'll always be around, or do you think they are on borrowed time?
Yes. How's that? This will continue. They will continue to be on borrowed time a lot longer than I think probably any of us would expect. The old adage is don't go around betting on the end of the world because it's only going to happen once.
Right.
And there's obviously truth to that. We have been what seems like to the precipice. God, how many times in the last 3 years? In the last 3 months. I mean, there was that weekend 6-8 weeks ago when Italy was going to implode over the weekend, and this time on a Friday night, nobody had any idea what was going to happen Monday.
Right.
We just went through it again really this week. Do not be surprised by the ability of those in power to maintain their power for as long as possible. So do I expect something? Let's put it this way. I don't expect something within days or weeks. Could something happen? Of course. I mean, there could be so many different. I mean, the analogy